Good morning, ladies and gentlemen. My name is Isaac.duenas, and I am just hold on. I gotta put this light. Hopefully it's better now with this light. I am located outside of Cleveland, Ohio. I am a mortgage loan officer, and this is a question that I come across. I wouldn't say every day. You know what? Let's say it every single day from Reddit. Let me read this question. Even with good credit score, no work history means no mortgage? Like, before I read the article, let's just think for a moment about this specific question. I want you to let me I'm gonna say $100,000. $100,000 at a 2.8% interest rate. And I want you to carry it for me for the next 30 years. I know that you don't have a job. I know that you really suck about keeping a job because you had bad habits, you smoke, you drink, you party, you do a lot of things in your life. Let me ask you, look at me straight in the eye and tell me that you're going to let me have $100,000 with those terms. It doesn't make absolutely anything. You wouldn't do it. But somehow we have this belief that the bank is the bank's responsibility to do that for us. That we earn it and we deserve it and we're entitled to it. Well, okay, let's read the article now. So even if I just found a job that pays like, I don't know, 40, 50K a year, or I can prove self-income, at least around there. I have around 700 credit score. I'm disqualified from a loan from mortgaging. I did research, and this is the possible options based on my summary. Number 1, government loan. Higher chance of mortgage approval with less APR. Less APR, we're going to talk about that. Instead of bank with a credit. That doesn't make any sense. Okay, number 2, awful APR scale, 30 to 40%, but so long as I can have a house, that's all I can ask for. Desperate for my family housed. And I think that's it, which is kind of hopeless. But may I have a chance? Any advice, tips would be greatly appreciated. All right, so Mr. I don't know who wrote this, but I don't want to say it out loud. A price of... Anyway, the guy that wrote this. Let's talk about number 1, government loans. What do you mean with government loans? If we're talking about FHA, VA loans, all banks, at least all major national banks, they have to work according to the rules, or not. How can I say this? They do Fannie Mae and Freddie Mac loans, which is the two big agencies. So if we're talking about FHA loans, you're like, well, I get a better APR, easy way to qualify. What happens to a mortgage insurance? It blows my mind to me when people call me and say, wait, I have a 3% interest rate and you're offering me a 2.875% interest rate. And I ask, okay, sir, let me ask you something. Do you have an FHA loan or do you have a conventional loan? And like, FHA, what's the difference? 3% is 3%. And no, it's not. You gotta keep in mind that when you're paying an FHA loan, what do you pay every single month that is an absolutely waste of your money? And I should make a video about this. That's right. You pay the FHA mortgage insurance. And guess what? It's 0.08% of the balance of the loan. Yes, the mortgage insurance is a percentage of the actual loan balance that you have at this specific moment. I'm talking about the principal balance. Principal balance. Okay? I don't want to confuse people, but let's say that you have a 3%. That's more in an FHA. Most likely, it is a 3.8% interest rate. Does that make sense? Because the bankers, the loan officers, people don't count the freaking mortgage insurance that you gotta pay every single month. So if you refinance from a 3% FHA and you go to a 2.875 conventional, it's a win. It's a win for you. Whether you drop the mortgage insurance or not, which I can do that in a different time. But the point is, this guy is saying, hey, FHA loan is a government loan, so I have higher possibilities to get approved. Heck no. FHA loans are way more complicated. FHA loans, VAs. Dude, first of all, those appraisals are an absolutely nightmare. If it's a brand new home, then you're set, you're good, because it's a brand new home. You know, the paint is fresh, the paint is good. They just built that thing. There's no broken windows, there's no missing shingles, there's no exposed plumbing, or you know, the flooring will pass, there's carpet. I mean, it's a new home, right? And still it might be able to, you know, if they don't like a door or something, I mean, the appraiser might be able to say something, but the home has to be almost new, or it has to be 100% without any problems, any risks. It just has to look good. So that first option that you're giving me, no, and normally they are more strict when it comes down to income. Do you have gaps of income? Do you change from one field to this other field? If you are self-employed, they are going to need 2 years of tax returns in a successful business. And they're not looking about how much money comes into your bank account. They are coming into what do you report to the IRS. We want to see all 36 pages, 36, I don't know, all pages. We want to see all your deductions. We want to see everything else detail on your business. We don't only want you to have a business producing income, we want you to have a business producing reliable income, and we want that income to increase year after year. That's an FHA. So, and then this other loan that he's talking about, an awful APR scale 30 to 40%. I'm assuming you're looking for a personal loan. Good luck finding those these days, because it's not very likely. And 30 to 40%, what is that? Like, it doesn't make any sense. You're talking about conventional. It cannot be a conventional loan. Conventional loans, you don't have to pay that much. I don't know. Probably you can go to a private lender that they're gonna rape you with a freaking 9%, 12%, 30% interest rate. Yes, but it is what it is. That's all you can afford. And good luck, because some of those people, they have their own rules and regulations. Look, my point is, by the way, the best option for your situation would be, in my opinion, sorry, my throat is not helping me right now. In my situation would be a conventional loan. A conventional loan through Freddie Mac. Keep this in mind, Freddie Mac. Sometimes, not always, you only need 12 months of tax returns. Your business has to prove 12 months of tax returns producing income. There are some stipulations to that. The business had to be in business for the past 5 years, I believe it is. But the lenders will only ask you 1 year tax returns, at least 12 months of proof of income, which is great. So if you started a business, I mean, that might be the solution. But then you're like, well, you're saying I need a 5-year history. I know, it's kind of confusing. But the point is that might be the best choice, the best solution for your specific situation if you're self-employed. If you're self-employed and you get paid with cash, you're screwed. And here's the thing, and I don't want to offend people. You know, I'm just trying to share with you what I feel, what my experience is. But look, the reality is this. If you have a business and you cannot prove you're producing income in your tax returns, you don't have a business. You're like, well, Isaac, my home is worth like $800,000. My mortgage is only $200,000. Shouldn't the bank consider that much equity? Like, come on, why do I need my job? Look at this home. If you have all this equity, if I were to lose the home, look at the humongous investment that you have. Banks are not in business of owning real estate. Let me repeat this. Banks do not want your home. They don't want to. They don't want you. They don't want to evict you. They don't want to deal with your taxes. They don't want to deal with your personal problems and drama. They don't want to have that home and then try to resell it to the open market to some ding dong to buy it as a foreclosure home. It's a waste of time. It's inventory that is sitting there. The process is very slow. They lose hundreds of thousands of dollars. They want their money to go in and the money to go out. And if they lend $300, $400, $500,000, even if it's $50,000 to someone that is not fully qualified based in some basic standards, it's not worth it for them. It doesn't make any sense making a business with you in those specific situations. I hope this information helps. If you're in a situation similar to this guy who is very confused that I have great credit, but I have no job, I mean, I don't know what you want me to tell you, man. Being honest with you, the problem is not the bank. The problem is you. What decisions have you made in the past few years that doesn't give you an employment? Now, a lot of people, all of you guys might contact me and say, well, Isaac, I really need your help because you understand this situation. That's fine. I'll be more than happy to help anybody. But the one thing that I want you to know is that if you're self-employed, I specifically go to a self-employment because it seems that a lot of people use that as a solution to this specific situation, is if you want me to look at your income, any banker, any loan officer, you need to give them all pages, even the blank pages of the tax returns. That way they can analyze it, they can look at all your deductions, and it's going to take time. It's not an easy process, especially if you have debts in your credit and your business is a very big business like a body shop that there's moving pieces everywhere. You own vehicles in your business and then they are putting your name, but your business pays for them and you're trying to exclude that account. It's not an easy process. I hope this helps if you're looking for a home, if you're looking to refinance your home in a very tough situation these days. I wish you the absolutely best. It's been 12 minutes. I hope you guys have a good day. See you. Bye.